Hi everyone, today's topic is again focusing on the bounce back loans. There is so many tips I can give you about this issue because bounce back loans have created so many directors who have been disqualified and banned from being a director in the UK. So it's really important that the money that you borrowed is spent adequately. So today's topic is about the use of bounce back loans to pay your dividends and the legal risks. Let me just give you some explanation around that, okay? So if you take the money out, your bounce back loan, you take the money from as a loan, then you take that out as dividends. That's definitely not a good idea because that will be investigated. Dividends can only be paid from distributable profits. Bounce back loan money coming into your bank account is not a profit. If a director uses bounce back loan money to pay themselves a dividend, that's not just poor judgment, it can be unlawful. In liquidation, this will be picked up by the liquidator very, very quickly and investigated. So here's what to check out for really key things, okay? Because whether there were any profits available when the dividends were paid, okay? So that's really important. Whether board approval or dividend paperwork exists. And sometimes you might have 1, 2 or 3 directors, so everyone has to approve it. Whether the company was solvent at that time when the payment was made. And then, just to explain, a client once paid herself monthly dividends whilst the company was losing money and used the bounce back loan funds to do that. Those transactions were very easily identified in the company's accounts and the bank statements and in her personal bank statement. So on review, none of those payments were supported by profits or minutes. The liquidator treated them as unlawful distributions or dividends. So here's some things that you can avoid, okay, at all costs. I'm going to give you a handful of tips. So treating the bounce back loan as like free income to spend the money as you see fit. Number 2, paying dividends whilst the company is technically insolvent. Number 3, failing to document any dividend. It's so important you put it in writing. And when you declare the dividend, you have to show the date, do a piece of paper that says the minutes of when it was declared and how much was declared and from where it was declared. If it was from the bounce back loan, that's not a good idea. Paying dividends from loan money is a major red flag. It creates a personal liability and many lead to recovery claims from the liquidator. Always take advice, always take legal advice. I keep saying this time and time again before declaring and drawing dividends. Speak to your accountants. They should be the first person, first firm, first whoever's dealing with your accountants. They should be the first people that you should speak to. And if you need more information about this topic, you can find me on Google, on my website, on various social media platforms. I'm V. Bracada, Navigate Business Recovery.